Hello guys, welcome back. This is the Complete Trader. So in this video guys, I'm going to be showing you exactly how I made a 100% on my $5,000 account. And so that's it. What you can see right there's the profit, about $6,400. And this was a period of, it was over a period of 3 weeks. Okay, and I did not have to trade every single day. Okay, and so I'm going to showing you the two strategies that I actually used in achieving this. So so what you can see right here, and you can see some of them I did record losses. So but you want to make sure that you are practicing proper risk and proper trade management, okay, all the time. All right, so let me show you guys. I'm going to be showing you the two strategies like I said, and so I'm going to make it very quick. I'm just going to run you through it, okay? And I want you to see this. So you see the Euro JPY trade here. This was based on one strategy, and everything else was based on another strategy. So the Euro JPY trade was based on the market maker cycle, or if you like, the forest master pattern, and the GBPCHF and every other thing was based on the value divergence strategy. All right, so let me walk you through that. So what you can see right here guys is the Euro JPY trade. This is the 1 hour chart, and as you can see we have a high, and we did have a higher high. So what you can call that is, this was a liquidity pool and this was a manipulation, right? And I did take my trade somewhere around here, okay, and then we did hold for profit for the whole day and see the massive run guys. So um let me show you guys a few things about that trade. So these were the things that were going through my mind, guys, when I was, going for this trade. So what you can see right here is a liquidity pool, right? So this was the high that was set at the beginning of the week, and later on, about Thursday, okay. So you know, in the ninth, they did move price above the high, okay. Um, but I want you to look at this chart right here as well. This is the GBP JPY, okay. The GBP JPY and the Euro JPY are positively correlated, which means that they tend to move in the same direction. All right, so what we have right here was the Euro JPY did break its own high here, but the GBP JPY did fail to break its own high. So that means there was a divergence. Right here we have a higher high, but right there we had a lower high. Okay, so what I was looking at was that the GBP JPY was showing me actually what this was most likely going to do. Okay, so I was using this to actually measure what this was most likely going to do. But I need you to understand that this was inside the trend on the 4 hour chart. So we are in a trending market, the market that was trending to the downside. Okay, and we did have some downside objectives, which I'll be showing you in the 4 hour chart in a moment. Okay, but what I want you to see on here is that the GBP JPY was already showing us that this Euro JPY was only making a false move. All right, and so that was one of the things that I saw actually, and the reason why I felt more comfortable taking the Euro JPY trade was because since they've done the dirty work, it just remains for them to move to the downside, and that's what they did actually. Now this, if you want at taking this trade, yeah, it did turn out to be very profitable, but I was already in the GBP trade, so I was already selling the pound in that one, and so I did not want to take this one again. So um, I rather went for this one. One, because they've done the dirty work, okay, and so that was just basically it, guys. And so let me show you guys on the forward chart. Let's go to the forward chart so you can see a little bit more on this one. So this is the forward chart, guys. So on the forward chart, you can see the high right there was set at the beginning of the week, and then later on the week, they did run that high, and that was the trade right about that area. Okay, that was when I took the trade. So you can see the market structure. We did have this low. Okay, this was the last low. Um, That was the last low that set a high. Okay, so this was a high that was set, and so when this low was broken right here, okay, and then we had a potential change in the market trend, and so the market did come up again. So we did have this high to this low, and then the market did come up again to set a lower high and break down. But you can see right here, they did swing past this high. Okay, they went past this high, but they failed to close above it. Okay, so that was just them taking liquidity right there. So that's internal liquidity, and that's something I'm going to teach in some other video, guys. So the snatching the internal liquidity right there, and so the price did continue to go down here, and then we create a little high here, and then again they played out what I just called internal liquidity. So they took out the internal liquidity. This is an internal liquidity. They took that out again and then raised to the downside. Okay, but when you look here, the structure can be a little bit confusing. So this is when the correlation becomes even, like a very useful thing for you. um, so we have the GBP JPY and the Euro JPY highly correlated, and so when you look at the GBP JPY charts, okay, it was the trend was much more clearer. We had this low that set a higher high. Okay, now this low was broken right here, and so we had the lower low, then we had the lower high. So right now we have a downtrending market structure, right? And then we did set a lower low again here, and then a lower high, right? So this was a more clearer trend, okay, much more than this. So I was looking at this to help me to figure out what is actually happening right here. Do you understand? And so we did have levels below that the market is most likely going to reach into. For one, we had all these points right there. These are levels where they should come back into. But check this right here. Okay, I wish we can. This is um, a screenshot of the 4 hour chart. So I couldn't scroll to my left. So but I just want you to see this right here. This was imbalanced, and so this is most likely a drawn price that where they're going to come back into. All right, and so but you can see what the JPY did. We've already balanced, price has already come back into its own imbalance right there, but the Euro JPY hasn't come back into that point. So who knows, if the euro continues its weakness next week, we may see the Euro JPY um trade to maybe around 130 big figure. Okay, now that is not to say I've given you a trade signal for next week, guys. I'm just saying, okay, everything in here is just for educational purposes, and so you just want to keep that in your mind, okay? So that's it for the Euro JPY trade, guys. This was something. First of all, we were in a downtrend, and again, we had a level we were looking to be a drawn price, and then we also had the institutional patterns playing in there. So we had the liquidity pool, a manipulation above the liquidity pool, and then an expansion back to the downside. Okay, so we had all of that playing out, and we were using the GBP JPY um, currency pair, or the GBP JPY pair, to actually give us, that better view of what's actually happening on the Euro JPY, when we can see that the trend was a little bit messy right there. So you see that. Okay, so let me take you to the other chart where you can now see the value divergence strategy. All right, guys, so this is the GBP CHF, and I'm not going to show you all the charts, of all the trades that I took. Like I said, it's only two strategies, so I'm just going to be using the CHF, the GBP CHF, to, you know, explain the second strategy, which is value divergence. Okay, so this strategy is value divergence strategy, and this is the screenshot of the GBP trade that I did take, and this lasted for 1 week. Okay, I've already closed lots of positions of this trade. Okay, so what you can see right here is the chart. And so this is about the point where I did take the entry. Okay, so how this works actually is that we are monitoring using the help of the city value board. I'm monitoring currencies that are gaining value and currencies that are losing value. So currencies that are receiving value inflow and currencies that are receiving value outflow. Okay, so what you can see right here, this one right here is the CHF. So every line here represents one of the 8 major currencies. So we have the GBP as I'm in this line right here. You can see that. And then this blue is the euro. I mean the GBP rather, sorry. So we have this one right here as the CHF and then the blue as the pound. So using the zero baseline, we can see that the CHF was above the zero baseline and started pointing upward. Here you can see that point right here, this shaded area. So see the CHF started pointing upward. That was when I spotted this opportunity for trade. And so the blue line, which represents the pound, started pointing downwards and it's below the zero baseline. So that situation showed me that the Swiss franc was receiving value inflow while the pound was experiencing value outflow. It's a very simple idea, guys. And then using, after I spotted this, now using the alligator, which is these 3 lines you see right here, that's the way we set that. And so using this alligator, I was not able to confirm the trend. So we can see that we have this white line. So it was just normal. Okay, so we have this white line, which is the slowest moving average, okay, in the alligator. That was above, and then we have the next one and then the next one. Okay, so here I was just using the alligator to confirm what has been seen right here. Now looking at market structure as well. Okay, so if you look at market structure, okay, market structure here, you can see that we have a low that did set a higher high, and that low was broken here. Now we have a lower low, and then we had the lower high. Okay, and then again the market did continue to break down, and so I think we had a lower high, have a lower low, right, somewhere around there again. So you can see that structure wise as well, we're in a downtrend. This was already showing us what value divergence, so we can trust this whole strategy. The alligator already confirmed that as well. And so we had all of those confirmations, you know, working with the CTI, value board. And that was about the area where I did take out a trade. So this is a very simple concept actually, finding what is gaining strength and finding what is losing strength and just bringing them together to give you the best currency pair to trade actually. And so that's why we did take that trade, and I held on for that trade for about a week, and you can see the massive bid, guys. It was really, really huge. Okay, so one of the easiest way where for me to spot the trending phase of the market cycle is actually using the CTI value board. Okay, so because when there's 2 currencies at divergence like this, you're most likely going to be having this. Okay, if you remember the NZD JPY trade that I posted on some time ago, it was almost similar. Okay, but that was I was buying the NZD against the Japanese yen. It was almost similar. Okay, and so that's just what it is, guys. I've given you my 2 strategies that I actually used to make 120% of my account, and the account size was $5,000, and we made about $6,400 on that over a period of 3 weeks, and that's just it. Incredible, guys, simply incredible. And I've given you the 2 strategies. The first one is the forex master pattern, and the the second one, which is this, is the value divergence. Okay, so I'll see you in the next video, guys. So until then, stay blessed, cheers, and God bless you all.